So it seems that with the economy in the position that it's in, it seems that lending is getting harder and harder across the board. Um, for buyers and sellers of businesses, to acquire that kind of financing, what are you seeing out there right now, Chandler? What do buyers and sellers alike need to know?
So, oftentimes when the economy turns or it gets a little bit more difficult, you'll hear that lending is getting harder, right? I don't love that term. I think it's just becoming more of a process. So, what that means is that it just becomes more of a process for you, the buyer, when you're trying to acquire a business. So, across the board, it's just getting more and more tight, meaning it's important that the potential, if you're a potential buyer and you're looking at a business, that business needs to cash flow. So it needs to have historical cash flow, so over the last 3 years. So if there's an abnormality, if it's had a really great 2023, but maybe a subpar 21, 22, that's going to affect your lending situation a little bit more than it did 6 months ago. That's always kind of been the standard bearer, that it needs a 3 years of positive cash flow trending in the right direction. But those little dips in years past are now going to be a bigger focus across the board. Likewise, you're going to want to see a strong 2024. So if this was a business that you're looking at and it had historical cash flow, but 2024 dipped, that again it's not going to be a no, you can't get lending. It's going to possibly require you to have a larger down payment or a different loan structure, maybe a higher interest rate, what have you. Let's talk SBA for a minute. So that's going to be the primary function that a lot of potential business owners use to acquire a business, and they are tightening a lot. So I've spoken to all of my SBA lenders. I've spoken to VPs of banks, and they're all just telling me the same thing, that you need to have industry experience. So if you're looking to buy a jewelry store, if you're looking to buy an HVAC company, if you're looking to buy a restaurant, right? You're going to need restaurant experience or HVAC experience or retail jewelry experience to get the best loan, maybe even to get a loan, right? So you're going to need that industry experience. That's a really big thing that they're not going to move on. They're requiring a little bit more of a down payment right now. Again, it's all going to be contingent on the business that you're looking to acquire. If it's just a business only, no real estate, obviously that's an unsecured loan, right? So it's going to be a little bit harder to get lending there. Outside collateral is a really big deal. So it's not just the strength of the business, it's also the strength of the buyer. That's always been true, but now the buyer is a really, really important piece to this puzzle. So they've got to be able to bring not only a sizable down payment, they need to have dollars for working capital, and they need to be able to have outside collateral that isn't tied to the business, whether that is a home to leverage, whether that's another piece of real estate, something that obviously lowers the bank's risk, right? That's going to be the key thing. The SBA and conventional lending is all looking at how can they lower their risk, and that's really what it's going to look like for the foreseeable future. Is that it's going to take strong buyers buying strong businesses. Most of the time when there's a will, there's a way, but kind of the days of, hey, I want that business and I think I might be able to handle it, those are gone. So you're
Yeah.
gonna need either to be able, and there's a couple of ways to fix that. One, introduction of seller financing, which is becoming more and more required even on the SBA side. I should have mentioned that before, right? They're requiring an SBA, or SBA is requiring seller financing, and with that, there's potential for that holdback to be on a 5, 6, 7 year term, and it's going to be held back for 2 years. And that's going to look different again for each business. But seller financing is a way to fix it. Bringing on a partner, right? So you may have the industry experience and someone else has the capital or has that outside collateral. Come in as a silent partner. That's one way, so that they can guarantee the loan. That's one way to fix the problem. So you can be creative, but now we're entering a place where you may have to get the loan. It's not just, look at a business, identify one, say you want it, call a lender, and in a week or two you've got a loan application pushed through. A little bit more work. It's a process. I don't want to call it hard. It just means we have to do our due diligence both on the business side and on the buy side. Make sure that you as a buyer are positioned in the best way possible to get the lender. Also, this isn't going to help anyone who needs a loan, but this environment lends itself to a cash buyer, right? So the way to solve that problem is pay in cash. So cash is king always.